Good evening. I think we are live. We are very happy to be here. So this is your host, Jaffer from Dar Blockchain. I'm happy to be in this second edition of the webinar session that we are starting in Dar Blockchain. With me in the moderation, we have Mohammed Manif. Mohammed, hello.
Hi, Jafar, and hi, everyone. Happy to be part of this webinar and to co-host with you. Our guest of today, I'll let you introduce him.
Yeah, so today we have a special guest. This is Elliot from FPA Crypto. I will let him introduce himself. Elliot, how are you doing?
Hi everyone, I'm doing good, thanks. Thank you to all of the team of Dar Blockchain to invite me for this event. It's a pure pleasure to speak about these topics in such an economic and uncertain environment as right now. So it's always a pleasure, and thanks to all of your team for the invitation, and thank you for the audience for being present.
Thank you, Elliot, for being here. So yeah, I think this is a hot topic, especially in this period. Economic crises are everywhere. Are we in recession or not? A lot of bad news are happening in the crypto ecosystem. So we decided to tackle this topic and try to understand where we stand today, especially that we had a lot of requests from our community asking us, is it time to be in the market? Is it time to wait? What people are really looking for some good advices. So we have chosen for you Elliot to share his thoughts. We'll try to interact with him, and also we'll be looking forward to have your comments. So feel free to, if you have any question in your mind, please share it. We will try to answer any questions that you guys will be providing here. So yeah, so recently, as you guys know, we have the FTX collapse. We will try to cover it as well. And I think we will start more about the macro situation, the COVID impact, the inflation. So yeah, if Elliot, if you can start telling us a bit about what's happening. Where do we stand today?
Yes, for sure. So obviously it's a pleasure to speak about that today with you. I will try to deliver you during this hour as much as added value and on an understandable way regarding the full situation. I have to mention that I'm not a specialist in economy, and that everything that will be related today correspond and represent only my own personal vision and thoughts of the market, and I will be happy to discuss this one with you guys. To quickly introduce myself, I'm Elliot, so I'm a technical analyst specialized in cryptos, and especially on technical analysis. So I will be happy for you guys to discuss with me about the economical situation. I will expose my thoughts, and you guys feel free to debate this one. So to quickly give you an overview of the summary about the topics that we will speak about tonight. First of all, we will have a quick macroeconomic overview of the situation of right now. We'll see if we are on a recession or not. We'll see some cool indicators of the recession that are really good for actors of the market. We'll see the effect on past recessions on risk on assets, since we are interested in cryptos. We'll see the correlation between risk on assets and cryptos, and also speak about the FTX bankruptcy event. And finishing, if we get time, with a daily chart of Bitcoin, seeing what are the potential scenarios incoming. To start with the current situation of the macroeconomic situation, I will share with you guys my screen.
Yeah, just to add like a bit small disclaimer. So guys, as Elliot tried to explain, here we are giving our personal thoughts. We are not economists. Everything you will be seeing here is not financial advice. It's only our thoughts. This is how we see the market. So please take it with a pinch of salt.
And do your own research as always. And this is an advice that we used to give to our students, and that we give also today. This is really important to do your own research. So if it's okay with you, Jafar, we'll start with the current macroeconomic situation, starting with inflation. So the inflation rate in Europe and US became literally crazy right now. The last result that we had in Europe were in October 2022, with the current inflation rate of 10.7%, the highest since the last 50 years. On the side of the US, October had a 7.7% in inflation rate. The highest one were in June 2022 with 9.1. The real question to ask ourselves today, it is how do we come from 2020 with a COVID crisis with low rates and low inflation, and the state at this moment has a goal to stimulate the economy to answer the crisis, to now, less than 3 years after, with the most aggressive rate hikes of the history on the last 80 years and an inflation rate that breaking records on the past 80 years. So why? First of all, I invite you to look at the screen if you guys can see it properly. On the left side of it, you can see the inflation rate evolution between important countries in Europe, and at right, the inflation rate in US. As you can see, we come from the year 2020 with an inflation rate around 2%. You have to keep in mind every time you analyzing inflation rates, a normal inflation rate in a normal world, let's say, is around 2%. This is the perfect balance between creating money, so printing money, and engaging people to find jobs. Okay, so literally fulfilling employment and answering to employment. What we can see is that from 2020 to now, we went from 2% to more than 8%. We have to understand what created this inflation and then why we have this inflation. So first of all, the first case of inflation is obviously printing money. I will invite you guys to look quickly at this chart that is the M2 money stock. What is money stock? Is literally the creation of money in the US by the Federal Reserve, okay? So what we can see here is that from here, 2020, the expansion of creation of money went crazy. With the COVID crisis, the states had to answer at the problems by stimulating the economy. As an important data, you have to keep in mind, guys, is that the dollar were created in 1792. 45 of the full supply of the dollar were created in the past 2.5 years. I will repeat that. An important data. The dollar were created in.
Repeat it again.
Sorry, I used to
repeat it again because it's really worth it. Like at the beginning of this conversation to be highlighted.
Exactly. So that's why it's important to start with an understandable thing. That is that dollar created in 1792, 45 of the supply created in the past 2.5 years. Yes, that's problematic, and you can see that directly on the chart, where here in February 2020, we had an enormous hike. Okay, so the current situation of crisis forced states to try to control inflation and to stop stimulating the economy. For that, there is one tool that they use and that we see everywhere on the news, the evolution of rates and what we call the rate hikes. So to see that, I will use the chart of rate hikes of the Federal Reserve. We can see that in 2020 and close to the crisis and the recession, because yes, there were a recession in 2020, we had really high rates, and then we came to really low rates in order to stimulate the economy. We can say that from February 2022, we went up to 0.22% to 4% of rate hikes, okay? Literally, what does it mean? The banks are borrowing money at higher and higher cost. They still lend it at good cost to professional and retailers, but they are making less and less money. And obviously, on the world where banks are making less and less money, they want to give and to lend less and less money to the people, and then the economy get less stimulated, and the liquidity that is from the risk on assets that are the most aggressive and the most risky, obviously, come either to the dollar or to the risk of assets. This is literally what we're seeing right now, and this is literally normal. Regarding this current situation and the rate hikes, we can
just before, Elliot, if you allow me a few questions before moving. So basically, basically we understood that money printing was the tool that governments and central banks used to stimulate the economy and get out of the COVID context, and that's kind of natural. Abused or not, that's another question, but on economic way. So now, like, the recession is kind of is it like manipulated, mastered in the way, because all the money that was printed on extra needs to be in return. So the recession is something can be seen as something healthy if it's not aggressive, right?
Actually, it's healthy, yeah, in a way that, as we will see later on this presentation, we need economic cycles. And as we said before, the main tool of states and the Fed, for example, of the BCE and the European Bank, it's using rates. However, this is my personal thought and what we see, even people we speak with and work with that are on the market since 30 years never saw that before. We are not only using tools to reduce inflation. I think, and this is only my personal thought, that we are seeing a system dying this time. Well, using rates in order to control inflation is great, but with such high inflation, it will take time. Recession is a question, but more than this, it's the evolution of prices for the consumer. And we can, for example, wait a year 2023 that can be horrible regarding that, and really high rates, especially for retailers that will try to borrow money either on a personal way or either in a professional way at the banks. So here it could be healthy, but the thing is that the health of the market, there is always someone that's having problems. So if they have to save the market, they won't save people. If they save the people, they won't save the market. The thing is that they didn't make any choice yet. So if we compare with the past recession and the past situation that were similar, this time it's totally new. This is what I want to mean by that. So we use usual tools on unusual situations.
Yeah, that's clear.
Yeah, and do you think like the employment rates in US, like as they are not like increasing similarly to any previous recession? Do you think that it's one of the factors that can deny this recession?
Actually, yeah. I won't take time to go on the chart of US index right now because I want to focus on topics we agreed on for you guys. But yeah, actually, right now there is some information that's, let's say, save us and analysts from recession. Employment could be one. The rise of indexes since the past months could be one too. However, this is only a first answer from the economy to the changement of monetary policy from the state. This is few answers, but I think they won't save us from recession. But yeah, right now I totally agree with you on the media and on the big picture. What saves us is data like that and employment. Yes, that gets better this end of the year, but only on the third quarter.
All right. But yeah, I will let you finish on the flow. I will let you go as we agreed earlier. So go for it.
Well, I don't want to bother you guys too much with numbers and data, but what we have to keep in mind, and this is what I'm telling students every day, is that right now we can literally wait for a horrible year economically speaking. It's not the most important. The most important to understand is that it will be a year with inflation and high inflation staying high. On the past recessions, we had to come with the rate hikes close to the rate of inflation. Right now, it's not even the case. We have inflation close to 10 and we have rate close to 4. The target Feds for 2023 are between 5 and 7. This is information that gives us the opportunity to say that the coming months won't be bullish for the markets, and that, for example, the current employment results and the rise in index US are probably what we call a bull trap before the full recession.
All right, and as a simple investor or person that is watching this recession, what is the recommendation? Like, what we hear a lot about cash is king. Do you think that cash in this period is king, or how do what advice can you give to a normal person?
Well, cash is king, and that's a key. Before speaking about that, I want to quickly expose, because we just spoke about the current monetary policy, but we forgot to, and I forgot to mention quickly some uncertainties and topics on the market that are worldwide inflation, the rise of raw material prices, the conflict in Russia and Ukraine, the conflict and new stimulus, monetary stimulus in China that is pretty new since this morning, and in Switzerland, the new one, Black Swan, that is the bank of Credit Suisse that is having 88 billions of withdrawal from their clients. So yeah, in such economic situation, cash is king. We could see on the past months that on the year of 2022, the dollar compared to the other currencies had a performance of plus 20%. So yeah, definitely cash is king, and definitely, as we've seen before during this presentation, with everything that's going on, there is one natural thing that do investors: they get out of risk on assets, sometimes of risk of assets, and they go in cash. Sometimes they go on real estate, but with the current states of the rates, they go on dollar. That's why the dollar were really strengthened on the past month. So cash is king. However, right now, the dollar is starting to get down and euro is starting to pump. The thing is that cash is king, but crises are full of opportunities. Personally, I have to admit that I'm mainly cash right now as an investor in the market. However, I think it's a good time to prepare the buying possibilities. Personally, I'm on the market since 6 to 7 years, and I never had the chance to get some either good stocks or specific position at good prices. Today, with what's going on, I think we're gonna see opportunities that we didn't see since the last probably 20 to 30 years. So cash is king, but it's definitely a good moment to start to think about how to allocate your cash, having a full plan, having buying levels, and then thinking about the diversification of portfolio regarding the current state of the economy. And I think this is the most important thing to do right now. Having cash, yes, but thinking in a way of investing regarding the current state of the economy. And we don't invest in this type of economy as we invest in every type of economy or during a COVID crisis, etc. So this is really different. And I think, yes, cash is king, but it's time to think about allocating cash. What do you think about that, Jafar? I would be happy
totally
to
agree.
about that.
Yeah, I totally agree in a way that yeah, cash is king, but it's time to start. I don't want to say like start having heavy positions, but at least start DCAing in a way that you have a target of start building your portfolio for the next run. So yeah, that's I think the position that at least I'm taking from here.
Totally agree with you. So literally regarding this situation, what I would mention is that the next 12 to 18 months could be really hard economically speaking, but full of opportunities. Regarding the bullish events incoming, this is only 2024, especially in cryptos with the famous halving. Before that, I think 2023 will be the year of the good opportunities and the good buying zones. So yeah, let's enjoy that and not be greedy and be consistent, and because it's about following the market and not just throwing money and waiting.
Exactly, and I think passion is key. Like you need to be patient, wait, have targets. Like, and if we set up a strategy and just follow it, I think it will give its fruits in the next, yeah, let's say in 2 years at least from now. So I'm happy that we are making the discussion like in the middle of this bear market. I think we will try maybe at the end of this webinar to go through the market and the cryptocurrency market specifically and see what maybe I will have some question for you, Elliot. What advices can you give like to the crypto community? So yeah, before going to that, let's try to come back to our topic. Yeah, do you want to speak a bit about the crypto market, or you want to go through the Eurozone?
Well, if you guys want, if it's okay for you, I did plan to speak about the current state of recession and to give you two indicators of recession that works really good for us and we want to share with you guys because this is
Let's
not
go.
things that we used to see everywhere and this is really cool tools, okay?
Let's go.
So we'll speak about recession. I don't know if you can see my screen.
Yes,
so the real question is, are we in recession? Recession, the word that we see everywhere on the news, everyone is scared about that. First of all, it's important to understand something. What is recession? Economical recession is a full year with a performance of GDP negative. Okay, so right now, to answer to all of the questions, we are not, economically speaking, in a recession. As you can see on the graph, only the last 2 quarters were negative. So we are on what we call a technical recession. Then later we could have an economical recession, what everyone is speaking about, is having 1 full year with a performance of GDP that is negative. And then later, the word that can happen is an economical depression. So this is several years with GDP with negative performance. So right now we are on a technical recession, and the real question is, are we entering on an economical recession or not? I am using personally, and this is what I'm teaching to my students, several tools, and I will expose two to you today. Tools that will help you to see if a recession is potentially coming or not. First of all, we'll speak about petrol and US oil. We'll go on the chart, but quickly. I won't show you guys all of this data because this is a long time to interpret. But what I can say is that what we've seen from our past analysis, past months, is that the companies of oil start to short the market and to protect themselves with funds short. What I mean by that? An actor on the market can short the market during a recession or during a crisis, okay, to make money while the market is going down. If an actor is not enough skilled or do not want to short the market, he can only buy short funds. And right now, the biggest companies of oil are buying fund shorts. And this is literally a big sign of recession. Second sign of recession, and this is the chart that you can see in front of you guys. This chart is, and we'll speak about the inversion of the yield curve. So you see, what do we have? We have the yield, the 30 years yield against the 3 months yield. So the long term versus the short term. We have to understand something. In a normal world, long-term rates are obviously higher than short-term ones. Why? Because the longer the period is, the biggest the risk is. The main problem is that today it's not the case, as you can see on the chart. Today, we have literally long-term rates that are higher, short-term rates, sorry, that are higher than long-term ones. It's to show you at which point the future is uncertain. As you can see, every time we went below zero, that is our balance point, this was a proof of recession, and we can see it here, close to the year 2000 with the bubble.com recession. Then we can see it here, close to 2008 with the worldwide financial crisis. We can see that we touched the balance point during the year of 2019, close to 2020, and we had a recession. And right now, where are we? Below the balance zone. So we should, this is literally a sign, and I will write it, and you can give either this chart in mind, guys, and also this wall that is when the point of balance is reached, this is a sign of recession for the next 6 months, on the next 6 months. okay, when you compare the 30-year with the 3 months, okay? So this is really a good tool to use for recession, and this one is literally telling us that we have a risk of recessions on the coming 6 months.
All right.
So yeah, this is two tools that I personally use. I don't know if you guys, and especially Jafar, want to share with us a tool that you use to analyze that, or we can either move on, but it was important for me to show you that, guys, because we literally using that on a monthly basis to analyze the market.
Yeah, I think these tools are very helpful, at least from to provide the macro perspective.
Obviously.
Unfortunately, I can't share my screen now. I told you, I have guys. I'm here in the black. There is an electricity cut, so I'm on the phone connected. So yeah, I will give you all the. Please keep sharing your screen because I'm not. I will not be sharing.
Okay, no problem about that.
Yeah. All right. Just to come back to the GDP, like you said, you mentioned that Q1 and Q2 we were positive, but for Q3, sorry,
Negative.
we were negative, but for Q3 we
Yep.
were positive. The expectations for Q4 are looking positive or negative?
Currently, they are positive, though. And this is all of the question right now about what we mentioned before is that, are we really heading to a recession? Because since the professionals are back on the market, so September, everyone were, let's say, dealing with the subject of depression and recession, but finally, since this time, what's happening on the index, there is a rise, okay? And what's happening on employment it is more and more solved, okay?
Yeah.
So I think, so this is weird to see that, I have to admit. And for example, in the academy, personally with the students I'm taking care, we're working on what we call a bull trap and a trap for the year. So, the psychology of the markets is about when everyone thinks there is a recession, then the market go up. And I think as soon as everyone gonna be like, okay, everything is back to normal, it's okay, we'll have the final recession. It's sad, but this is how markets work. And this is a good representation, actually, and a good topic to use, because since everyone is speaking about recession, then the indexes go up. So yeah, the psychology of the market.
Yeah, I'm sorry, there are some cuts from my side. I don't know if you asked me a question, Elliot.
No, sorry, can you hear me well?
Yeah, now I can hear you very well. There are some cuts.
Yeah.
I don't know.
I'm sorry for that.
No, no worries, no. I think it's from my side. So I think, from the articles I was reading, I read a lot that Europe is in a recession, UK is in a recession, but America is kind of like the US are in recession, but they are still in denial. And so, as you mentioned, I think once everybody say yes, we are in recession, I think we will be just the recession will be just behind us. So.
Totally.
Yeah, so once everybody agrees on something, I think that's the sign that it's behind us, and maybe you are going through a different cycle.
Totally agree with you.
Excellent. What are the next topic that you want to share with us, Elias?
So if you want, I can move on with, because we just spoke about recession. So I thought it would be great to speak about the effect of recession on risk of assets.
Yeah.
So I will use the chart of SP 500 on a weekly basis here. So to quickly speak about recessions, because everyone is scared about recession, but actually there were more than 12 recessions since 1930. What is important to see is the effect of recession on risk on assets, and especially on SP 500. As you can see on the screen, the past recession were, for example, 1930 with the Great Depression and less 80% performance on SP 500, 1965 less 33, 1973 one of the big ones, the oil recession, 2001 the internet bubble, 2008 the subprime crisis, so worldwide economical crisis, and 2020 the coronavirus. The average of correction during the recession for the SP 500 is around 33%. from the top. Right now in 2022, as I mentioned, we are, sorry to say, only at less 27%. If we use the average, and it's not it is not a sure data, okay? This is only data we use to find the next support zone if we break the past one. But yeah, if the recessions respect the past one regarding the average performance, we should see SP 500 heading to a performance of less 30 to 33% and being around the support zone of 3,280 and 3,190. Okay?
Okay.
With a bearish movement like this, so potentially the bearish continuation of the SP 500, or as we spoke before, and I think it's cool that you mentioned that, Jafar, because we are probably on a scenario where we want to think people everything go well until having the final movement. Okay, this is usually how the psychology of the market works. But either from here or here, at some point, it's gonna come. And if it comes, Bitcoin and risk-on assets, because of their correlation, would have a significant correction too. And that's why we're gonna directly go to the chart of Bitcoin and see that Bitcoin is also having the same types of economic cycles. And then right after, before getting back on the chart, we'll speak about the FTX bankruptcy topic, Jafar, if that's okay for you.
Yeah, sure.
Okay, perfect.
The question that comes to my mind now, you talked about the correlation between the crypto market and risk on assets and the S&P 500. Do you think that this correlation will be there in the future? Like, when can we see at least the crypto economy going autonomous in some way? I know it's still a risk on asset, but I think that most of the people from the crypto community are waiting for the moment where the crypto, like the crypto economy, will be a bit autonomous somehow.
Obviously.
How
Well, go on with the question, Jafar.
Yeah, I said, how do you see it? Like when we can see the crypto goes like autonomous? Like when can we see an correlation between the crypto market and the S&P?
Well, as a crypto enthusiast, I want to say as soon as possible, ideally. The thing is that I'm a crypto enthusiast, and as we all are here, we all dream about a market that is non-correlated to the others, and that can also be a tool that keep our value, especially during this time of crisis. Because if we remember well, Bitcoin were created in 2008, put it on the market 2009, especially to answer to this problem. However, today we can see that Bitcoin is not a tool that is keeping your value up while having recession and economical disaster. We have to understand that today, most of the liquidity of the market, the important ones, come from the professionals. And today, for now, professionals decided to treat Bitcoins as a risk-on asset. This is great because then we can profit from the liquidity of the professional. And this is literally what led us to the past bull market that were crazy. However, we cannot have only the benefits. Right now, we have only the weaknesses. That is because the professionals are trading the Bitcoin as a risk-on asset. When professionals are getting out their money of the market, Bitcoin is having the same problem, but the risk-on assets. So I won't say there will be a moment, like a specific moment, where cryptos become autonomous. I think the only way for crypto to become autonomous is to teach people 1,000 times, 1,000,000 times about cryptos, and then having more retailers using it. Right now, there is really few retailers. Only 4% of the world are using cryptocurrencies. I know for a lot of you guys, you're still hearing that we're still early since a long time, but literally it's the case, and probably too early yet to have a market that is non-correlated with risk-on assets.
Okay. This is a long answer.
Yes, sorry, but this is like a specific topic, between the dream of Satoshi and the current state of Bitcoin,
Yeah. No, I agree with you. I agree with you. But we all wonder, like, when, at least like now, with all this economic crisis, with all this inflation, with all this printing money, and we know that Bitcoin and cryptocurrencies can really resolve these issues. So we are looking forward to see like big institutions entering this market and make it a bit like. If we can call it uh, anti-inflation financial
Yeah,
assets. So I think we are still early, but it's good to see like how everybody like see it. So yeah, now we are starting having some questions more related to the cryptocurrency rather than
cool.
the macro situation. So I think we will answer all your questions, guys, just in few. And yeah, let's keep with the flow. So yeah, Elliot, what did you
If
prepare?
there are any questions?
I think we will take the questions just later, but
Okay.
we're still like a question are related to the crypto situations, at least for now.
So before the question, what I just wanted to show is that we're using right now what we call the BLX chart. This is literally the chart with the most historic on the Beacon chart of the application that we're using TradingView. What is important to understand is that we are living cycles as crypto lives cycles. And I took time to mention each bottom and top of the cycles. And as you can see, cryptos are also living economic cycle that sometimes are, and a lot of times are correlated with the current states of the market and the economy. But one thing that Bitcoin always respect is that is making higher lows and higher highs. And while the Bitcoin is trading above the level of 3,140, it's sad, but it respects its cycles. So everyone right now is about, yeah, did we bottom? Did we find a bottom? Are we having a bottom? Nobody knows for now, but what is important to keep in mind is that Bitcoin is respecting its cycles while having high and higher lows. Second thing to understand is that a bear market cycle, and we usually forget to mention that, and we don't see that a lot on social media, but a bear market is in three phases. The first phase, as you can see here, the second ones, and the third one, that is the capitulation. We are actually living the third one. We want, as investors, start to think about allocating our capitals from the end to the second one to the beginning of the third one. So literally, this is right now. That's why before I was mentioning that cash is king, but it's time to allocate because it can be possible that we are living the last phase of capitulation in the crypto market. And then to make the link with the next topic, how came this last phase of capitulation with what we call a black swan event on the market, an event that nobody can even think about, the bankruptcy of the number 2 platform of the crypto market, FTT. And if you want, therefore, we can move on to this topic.
Yeah, just before moving on, I think here we are talking about the black swan. Do you think that a black swan is inevitable in a way that it should happen? So we need to leave the pain before moving to the next cycle. Like, is it mandatory to confirm this bear market, or there are some other ways?
Well, there is other ways. The thing is that today with Bitcoin and the crypto market, the only thing that we have to compare is the past. And yes, on the past, every time the market has to mark a bottom on 80% of the cases, there was a black swan event. I think about empty gods. I think about either 2020 with the crisis of COVID, 2000, and also the problem with BitMEX. I don't know if you guys remember about that. And today FTX. I think it's not an obligation, but I think that the market needs an event that creates this type of disbelief.
Yeah.
So it's not an obligation to get this type of black swan, but yes, every time we see a bottom of the market, personally, this is only my third cycle. But what I can see is that every time there is not a black swan event, but a big event that creates disbelief. And usually before this event, even myself and my colleagues, traders and analysts, we are asking ourselves how the people we start to disbelieve in cryptos, because this is sad, but we want to buy when people start to disbelieve. We want to buy when nobody wants to buy. And Bitcoin was crashing since early, since end of 2021 November, and we were really like, at what point people will stop not believing on Bitcoin, because everyone was bullish and really bullish, and we finally had this black swan. And again, and this is what we spoke about with our analysts at the beginning of the week, is that again with having this black swan event. So I'm not sure this is an obligation, but yeah, every time we have something that creates a big disbelief as that.
And I think
is a pretty good sign for us. Sorry to cut you.
No, it's me. I'm sorry. And I think we have one. Like we have a beginning, let's say, of one. Like let's talk about FTX. Let's explore what happened. Like how in in the world, like the second largest cryptocurrency exchange, like collapsed in, I don't know, in 1 week. Is it as like, I think we are very
in 1 week? I think you have a good picture on the screen. That is the week of the bankruptcy of
wow
of FTX. So yeah, in a week, Sam Bankman-Fried, sorry, went from 10 billion net worth to 0 in a week.
Wow.
So yeah, you want me to have a quick overview of, and to remind everyone the quick situation of FTT before exchanging about this one?
Yes, please give us like a brief, yeah, so that we can understand what happened, and we move to the crypto situation. I think we still have 20 minutes, so we are, yeah, go for it.
Timing is great, right?
Yeah, time is tight, but we are fine. Like we can discuss the FTX quickly and move to the crypto situation.
So let's quickly speak about the FTX bankruptcy and this famous black swan event that led to this new capitulation event on the crypto market. So FTX is the number 2 platform on the crypto market. Actually, we're the number 2 platform since its bankruptcy. I think it was on the 7th of November, 7th, 8th of November. What happened is that I won't speak about all of the beef that happened on Twitter between the CEO of Binance and the CEO of FTX, but mainly the story is what? FTX is a platform that is proposing really good rates at lending. And it was something weird for a long time on the market. I won't say an influencer, obviously, but as an academy of cryptos, we are proposing links and affiliation, even if it's not our main actions and
activities.
Thank you. However, I can tell you guys that FTX were literally the best affiliation links that we could use. And this is something weird. That's why personally, and we never did mention FTX anywhere. The thing is that there were a problem behind that. The problem is that FTX company were using the funds of his users, so the funds that they keep, and it's stated on the rules of the platform that they can't use them. They were literally using them with leverage in partnership with Alameda, that is one of the most famous crypto funds on the ecosystem. And they this lead to losing and having a debt of plus $10 billion. Millions of dollars were lost by all of the users. The SEC, Security of Exchange, had to open a Chapter 11, so bankruptcy for the platform, and the token of the platform FTT had a performance like a crazy historical performance in a week, close to minus 94%. The thing to understand is that the main problem weren't only to use the funds of the users with leverage. The problem were also that they were using the funds of the users in order to buy a villa in Bahamas. Okay, so we are literally here not on an economical problem, but just a creep CEO that literally became a criminal through his year working as a CEO at FTX. I don't know if you want to add anything about the situation of FTX before mentioning the hack.
I think like SBF did break all the rules in a way that at least how on earth he can borrow using FTT as collateral. Like that, we use normally a collateral are here just for to prove to the lender that if in case the company get bankrupted, there is at least some collateral. But in this case, using the FTT as collateral is there is no sense. Like there is no sense. I don't know how like the institutionals believed in in FTX with all this mismanagement, but yeah, I think we're still very early, like from an economy point of view, at least. I don't want to. I want to take some questions from the audience. We have few, so I will start with a question from Smartness Tunisia. I think this is Hatem. So, he's asking about the merge. If the merge has any influence in the market, can you answer here, Elliot?
This the merge influence the market. Well, there is several markets on the market. So yeah, it changed a certain market, especially the Ethereum market and all of the Oracle that were behind, for example, Link that were used to keep data that was really big from ETH that wasn't able to keep all of the data. It changed a lot of things because we don't have Oracle anymore. However, I don't know if you think about influencing the market regarding the price or
I think
regarding his
price.
technology.
I think the question is regarding the price, yes.
So if we speak about regarding the price, this is pretty interesting because we were mentioning before that when everyone say it's the recession, then the market can go up. And then when everyone think everything is going back to normal, then we're having the recession and the down movement. Here we literally had the same things happening. I don't want to throw flowers on our team. This is not what we're doing, but we literally, there was a game on our academy. 2 weeks before the merge, we did announce to people and remind the key rule that is buy the rumor, sell the news. We were waiting for a crash of Ethereum during the event of the merge. Why? Because professionals were exposing themselves before the merge when it was announced. And then when it came to the merge, it was a really good moment to sell instead of buying. And then again, retailers had to buy and professionals dumped on retailers during this event. So yeah, it has an influence on the market, but not the one that 90% of the market was waiting. And this is pretty interesting for the next similar events that are coming. I think there is a good lesson to learn from that and from the past event also, if you can look at them. But yeah, buy the rumor, sell the news, really important thing. And again, it's happened with Ethereum and from proof of work to proof of stake.
All right. There is another question coming from Skander. Is this the right time to invest in Bitcoin, Saim?
Well, that's a pretty open question. Is that the right time to think about investing in Bitcoin? Always. It's always the right time to think about investing in Bitcoin, or at least investing your money, putting your money to work, obviously. Is that the right time to invest in Bitcoin? Yeah, we are close, I think, to a right time to invest in Bitcoin. The thing is that you guys need to have, and I don't know how you guys are working, but we're working with conditions. For example, Jafar, you mentioned DCA before, okay?
Yeah.
DCA, dollar cost averaging, is really good. It's a really good strategy. So if you would use DCA, obviously, with a market that now from his top is having a performance of less 77%, and if we look at all of the past bear markets, the average performance during a bear market is between 81 and 86%. So we should be close to the bottom. It's a good zone to DCA. However, and to start to buy per level. However, it's important also to have its own buying strategies, meaning that it's the third phase of the bear market. So yeah, it could be great to think about investing, but you have to fix yourself zones and allocation of capital. Using DCA is pretty great, but I have to expose with you a data, guys. And I think this one is really important to remember. An investor that had DCA Bitcoin every week since the last 3 years have today a performance of less than 8%. So in the theory, the DCA strategy is super because then it gives us the possibility to invest without even looking at the price, the volatility, the current trend. However, today, and before we were speaking about a certain system that is dying, the system of tomorrow, it will be harder to make money, harder to invest, harder to make good decisions. And then with the case of BTC, we'll also have the same problem. Then we have to make not better decision, but clear decision. So DCA is something good. I would personally advise to buy per levels. So you take your full capital, obviously capital that you can lose and that you can put on a ledger or on an account for between 3 and 7 years to 10 years, depending on your plan. Then you have to fix buying zones and then buy. If you have a capital, for example, of 10,000, you can divide this one in 10 equal parts. And then buying per levels when the price is likely to please you. So yeah, this is a good time to start to buy per levels, 1 time, 2 times, so 1/10, 2/10, 3/10 of your full capital. However, with the current economic year that is probably arriving, as we've seen before, cash is still king. So right time to start to buy per levels, but not the right time, obviously, to be full in investment and have zero cash left for the year 2023. So it's kind of a bit long, but yeah, a big topic. So important for me to remember the basics and to not just telling you guys it's now to buy, it's not now to buy. Nobody knows. The important thing is to develop scenarios and strategy.
Exactly. We have another question from Raif bin Musa. So he's asking, do you guys think that we will ever see a transition to self-custody of funds and getting rid of central entities like banks and exchanges?
Pretty interesting questions. Thank you so much. Actually, this is literally the main subject that we are covering right now in cryptos. To quickly finish with the topic of FTX is that there were good points and bad points about it. The bad points, obviously, is the creation of fear and doubt. The good point is that, first of all, we have proof of reserve from the centralized exchange today, a data that we didn't have before. And that will give opportunity to actors of the market to choose the right ones. However, today, with the data that we have, we can see that there is not much centralized exchange that are really on the good state, apart from Binance. And today, the main topic and the main subject is that will we teach enough people to become and to use self-custody tools? I think it will take time. Well, why? Because as a coach, I can tell you that we are teaching every student as a first base to have 100% of your long-term holdings on the self-custody. However, we still see people today that can't manage the story of the 12 words and the 24 words. And for the young generations, I think until 30, 35 years old, this is tools that they are used to. For the other ones, and I see that a lot with my students, it starts to become a bit complicated. So I don't think we'll see a big transition to self-custody in the coming years. For now, I think centralized exchange are still needed to the market, especially for adoption. I'm scared that if tomorrow there is no centralized exchange, adoption get less and less efficient, because we have to admit that centralized exchange are really easy to use, and then this is also why there is a big adoption in crypto. So I don't see that coming quick. I hope it's getting. We're working on teaching the maximum of people using self-custody tools, but I don't think it's coming early for the crypto market, unfortunately, obviously.
Yeah, I think like the FTX collapse will be forgotten by the time, and in 2 years from now it will be just a memory, and we will be using like Binance and maybe a new FTX again and again. So I don't think that we will be the switch to DEXs. I don't think it's coming, at least in the next months or maybe years, because the user experience is still not the best, especially for traders, for leverage traders. But it will definitely come in the future.
Quick question, Jafar, before moving on. Can the audience comment while we're speaking right now?
Yes, they do.
If you guys can comment, it would be great to see. Just mention CEX for centralized exchange and DEX for decentralized exchange. Who is using what right now? More centralized or decentralized exchange?
Yes, please, guys. If you can put in comment like what are you using, at least for now. But I think like even myself, I use sexes, but of course I use DEXs, sorry, but of course I use centralized exchanges for some. It's more useful at least, and to interact with fiat. I think it's still relevant. I will let the audience like comment, and meanwhile can we have like as we still have only 5 minutes, can we have a small technical analysis on Bitcoin on the weekly? I have a question. Like I saw you presenting the Bitcoin chart and mentioning that we are building higher highs and higher lows like since the beginning of Bitcoin. So I'm curious to see if we do a lower high, a lower low. What like where can we go? Like if Bitcoin with the black swan can go to, I don't know, maybe 1,000.
So below the 3.1K level, that is our last low to respect. Yeah.
If we do that, like how can the market react to this lower low?
This is such a good question. Nobody knows yet because it never happened. It could be critical, could change a lot of models on the Bitcoin, especially analytics models that are based on this theory of cycles, could change anything. Personally, as a crypto enthusiast, there's two things. We see literally that the bullish markets of Bitcoin are less and less efficient, obviously, because of his capitalization that become bigger and bigger. So obviously, to make ×2, ×8, ×10 become hard at some point. So with a big capitalization. However, admitting that we are less and less efficient in cycles is not admitting that we can break cycles. Breaking cycle will be literally something really hard to swallow. And I think a lot of people, even big holders from 2008, 2016, 2011, would either sell if Bitcoin at some point is not respecting the cycles that is respecting since its creation. Couldn't even imagine what could be the consequences about that.
Okay, but it's obviously very, very negative, right?
Obviously, very negative. It would be very, very negative to see a Bitcoin that is not respecting his cycles. This is literally the basics of Bitcoin, and this is why on a big picture, even with people that don't really like crypto, there is nothing to say. On the past 3 years, it's still the assets that bring the most performance on the market. However, yeah, it would be a really negative information, and I highly doubt it could happen.
Yeah, me too.
However, anything is possible, and if you're ready to win, you're ready to lose, and this is a scenario that we have to prepare also.
Yeah, I will be looking forward if we do it, to be honest. Like it will be one of the biggest opportunity, I think. So yeah. We got some answers from the audience. 100% of the answers are centralized exchanges.
Okay.
What do you think?
Normal. Seems logic. I have to admit, I mainly use centralized exchanges. Let's say it's a mix between both. The important thing is that using SEX, so using a centralized exchange, is not bad. It's really good, especially today, since you have a proof of reserve. So, and Vitalik and CZ are working on coins in order to have better proof of reserve. So using a CEX is not bad. The bad thing is keeping his cryptos on the CEX. So as long as you're using a CEX to buy, sell, trade, exchange is okay, but you always have to keep your holdings on a self-custody tool as a ledger or as a treasure. Tomorrow, decentralized exchanges will become more and more normal for the environment. The thing is that it's still a bit harder to use. So I'm not really surprised everyone using SEX, and I want to tell you guys that with everything you're reading right now, it's not time to change everything you were doing before. It's only time to continue using the right platform, and this time, if it wasn't the case, having your long-term holdings on the self-custody tool, and yeah, you have pretty much all of the content that you need over the internet. So it's pretty easy today to use self-custody tool. So yeah, it's not bad, and it's pretty great. The important thing is how do you hold your cryptos.
Yeah. All right, I think we come to the end of the session. So even though like we did not go through some topics, yeah, before leaving, Elliot, if you give the community some tips about the next cycle, or if they need to do some positions, like what would be the advice that you recommend to the audience?
Well, as you can see on the screen, and we won't take more of your time, guys, but I invite you to have a screen because this is things we used to share with our students. So first of all, this is the signals we wait from the market, not the crypto market, the full market, to see a new bull market. So a risk-friendly environment, a dollar that is losing strength. We already started. A bearish key rate and control inflation. We're still far from it. To recover strong institutional interest, it's not the case with the premium grayscale reduction at less 40%. This is something to focus on. And ideally, the arrival of a catalyst. We can think before at the ACOs on 2017, 2018, and we can also think about the NFTs in 2020 that became such a thing. We'll need also something like that. For the crypto market, especially, I think the best advices that I can give you right now are to use the year of 2023 as a year of learning and practicing. Everyone is like, yeah, it's time to buy, not time to buy. There is what we call tools, limit orders. I think it's really important for you guys to make sure one thing. During one historic recession, it will be time to allocate properly your capital and not making decisions with emotions. The first best tool for that is having a clear plan, having a clear allocation of your capital, buying parallel with the strategy we've seen before, and buying with limit orders. So you don't have even to think about when you buy or when you don't buy. You put your prices. If the price go there, you buy 1/10, 2/10, 3/10 of your full capital as you decide. If we don't go, then you don't buy. And this is really the main thing I think you should focus on, because your worst enemy during this year, 2023, full of opportunities, will be your emotion and your own brain.
100%. A question, Elliot. Like, in order to put like a limit order, you need to use a SEC, right?
Obviously, yeah.
Yeah. So we come to the question like sexes. Yeah. And we have Smartness Tunisia Hatem saying sex because there is a simple to use bridges.
Totally agree.
But, yeah. All right. I think we covered most of the topics. Thank you so much, Elliot, for being part of this webinar sessions. I think this is only the first one. We will definitely go more in depth to analyze like cryptocurrencies. We will do some technical analysis in some cryptos, analyze some altcoins. Talk more about the technical analysis in itself. Like most of the crypto community, I believe, needs some basics on how to use how to analyze a crypto price, how to set up an entry points, how to decide how to use the basics like support and resistance and index indicators that can help everyone to like make a good decision. I think we will allocate some more time to that in the future sessions. Again, thank you so much, Elliot. Mohammed, if you want to say something. Mohammed, are you still with us?
Yes, actually, I was just looking for the navigator, and was really amazing having you, Elliot, and thank you, Jafar, for initiating this webinar. As you said, others will certainly follow. So stay tuned, and thank you for everyone.
Thank you, buddy. See you in the next webinar. Bye-bye.
Thank you, everyone, for your attention. Have a great day. And
Bye-bye.
audible.
Ciao.